Hi, good afternoon, ladies and gentlemen. Welcome to our event. Solar Capital was a partner of Moscow Exchange Forum for this year, 2021, and we're hosting virtual investor meetings. Welcome to the conference with VK, which is presented today by the investor relations team, Tatiana, Volochkovich, and Kazaryan. I think we are ready to start with the Q&A session right away without any opening remarks. So if you want to ask a question, please raise your hand in Zoom, or you can write your question in the Q&A session. And while we're waiting for our first questions, I think I'll start maybe with the very first one. If you could comment on the deal which was announced between MFT, Gazprombank, and Sberbank on Friday. If you could just share your thoughts and maybe highlight the key things that are most important to know for investors.
Yeah, so on this particular topic, there is not that much that we as a company can elaborate on because this is a shareholder issue and has nothing to do with the operations and the management team. From what we can see from press releases from both Gazprombank and Sber, there is a shareholding change within MFT. So MFT is a controlling entity of VK, and instead of Sber, before the end of the year, Gazprombank will be the entity holding 36% within MFT structure. So nothing really changes for the group. So the controlling shareholder remains the same. It's the MFT, and within MFT there is no single controlling shareholder based on the information which we possess. Beyond that, we would perhaps ask investors to liaise with Gazprombank or Sber on further comments around rationale and next steps and new board members and things like this.
Mm-hmm. Okay, so maybe we'll continue with the current trends. If you could comment on quarter-to-date trends in digital ads and games and other key verticals. What are you seeing right now? How things are changing? How the base effects are affecting what's going on?
Yeah, so we reported quite recently, and to be honest, there is not much we can say which would be different from what we said during the 3Q reporting conference call. On the positive side, there is no change in trend versus what we have observed a few weeks back. So macroeconomic recovery continues. Of course, we went past the lowest base when it comes to macroeconomics and therefore cyclical businesses like advertising. So this was in the second quarter of this year. So sequentially, there was some deterioration in the pace of growth of advertising revenue line in 3Q, and we anticipate further slowdown in Q4, which will mark the most difficult base during this year. Nevertheless, still it is a very strong year for advertising, which is our biggest revenue line item. And this is driven by the improving macro backdrop. In terms of the partial lockdown or non-working days Russia has observed recently, it hasn't really had much impact on advertiser demand and performance of any verticals really. It was quite short duration, and now things are back to normal. With no continuous business closure. So in that sense, the situation is not providing grounds for negative developments. When it comes to our games business, again, here trends remain stable versus what we were saying recently. Of course, games is seeing opposite effects to advertising this year. It is experiencing a very high base effect from the pandemic, given the lockdowns experienced last year. So expectedly, what we're seeing from other games companies globally as well is that performance is quite mixed. So companies which have had quite big launches, for example, are performing relatively well, same as those with sizable M&A completed this year or last year, which is now shown in the numbers. They are showing kind of better growth rates than the broader market, but the market itself is seen contracting by 1 to 2% in 2021. We expect to outperform this number, and this is despite actually no sizable launches this year or no significant M&A contribution in 2021 either. So essentially, we expect to outgrow the market and gain market share purely through organic growth and performance of our existing portfolio titles, which is quite a big achievement given the base effect we're facing. Other than that, again, across all verticals, practically, we're seeing kind of normal performance with no significant change in the trend.
Just to remind everyone, in order to ask a question, you can raise your hand and then switch on the microphone, or you can send a question to the chat room. There is a button which is called Q&A. And in the meantime, I'll continue for the time being. Tang, could you maybe talk about the efficiency of digital ads? How do they compare with your immediate peers and then competitors?
Well, it's difficult to make like-for-like comparison unless you do case studies with specific advertising partners, and even there you have to look effectively at the same campaign to have like-for-like results. But we can comment on our side that obviously we have been investing a lot into advertising technologies in recent years, and big thanks to our new head of EdTech, or I guess not very new now, Egor Abramets. And as a result, we are seeing a strong improvement in the efficiency of our ads, which is resonating with advertisers. And this is why our advertising revenue growth continues to surpass market level, and hence we continue to gain market share. And where we're seeing biggest traction as of late is performance ads, where advertising revenue growth is a multiple of what we're seeing on the broader advertising revenue growth front, as well as on SMB side. And both performance segment and SMB continue to provide significant room for further expansion, because performance, let's say, is close to half, or maybe slightly more than our advertising revenues in total. So there is significant room for further expansion as advertisers are moving more deeply into performance formats. And for when it comes to SMBs, opportunity is even larger because this segment accounts for less than a quarter of our total advertising revenues, and a single-digit % of active SMBs present within our key social networks, such as Odnoklassniki and Vkontakte, actually pay for promotion within the social network. So we're adding a significant number of new tools which improve measurement, which provide much more simplified access to advertising, including through mobile. Essentially, you can launch an ad campaign via just a couple of clicks, and we use mechanics on our side to automate the process of launching this ad campaigns, even selection of, let's say, a visual image which can promote an e-commerce store from our business customers. So technologies allow us to make the selection on behalf of our counterparts to see what might generate the biggest number of clicks. So in that sense, we're seeing strong growth in eCPM, and we anticipate that this trend will continue and driving growth of our pool, which remains significantly below some of our global peers, and hence we are quite comfortable reiterating our plan of above market advertising revenue growth in the coming years, and further market share gains versus the current roughly 15% digital market share we hold today.
Then you said that performance accounts for about a half of your ad revenues, right?
Well, depends how you measure it, but let's just say it's a bit more than half. But yes.
Yeah, where was it a couple of years ago, maybe last year? Is it growing over time?
Yeah, obviously it's growing over time, because as of 3Q, and Anya can correct me if I don't recall it right, but the growth was about 50% on performance, and broader advertising revenue growth was like 29%.
Yes, performance advertising revenue inside our revenue, advertising revenue was up 40% year-on-year in the third quarter. So it was actually faster than our broader advertising revenue.
Okay. And what about the impact of IDFA? I think one of the hot topics of this year.
So on the advertising side, it doesn't have a significant impact on our business because we are focused on the Russian market when it comes to ads, and the Russian market is dominated by Android devices. So it's very different from the US market, where more than half of the devices are iOS based. In Russia, it's dominated by Android, and so the impact is on less than a quarter of all mobile devices. Furthermore, we have quite sizable reach on the local market and already cover more than 90% of Russian domestic internet audience, and many of these users utilize a number of our services, including our email or Vkontakte or Odnoklassniki and so on. So we have essentially identified them a while back, and as they have provided us with their contact details, email addresses, phone numbers, and so on. Tools such as our unified ID obviously allow us to understand the profile of our user a lot more than previously, which is helpful. Also, given that a large part of our advertising remains branded ad driven, obviously this segment of the market is completely unaffected by IDFA. So I guess our relative underdevelopment on the advertising side is a helpful parameter in this equation as well. So bottom line, we have seen practically no impact when it comes to our domestic ad business. Of course, there was some impact on the game side, but games account for less than 10% of our total advertising revenues. And here, of course, we saw a few months of month-to-month declines when it comes to advertising revenue growth. Initially, after the effects took place in April, this has lasted into the summer, but already in recent couple of months, we returned to growth on month-on-month basis, and we see that the market is gradually adjusting to the new identification reality, and comes the beginning of the year, we obviously don't expect things to return back to where they are, because we live in the new reality now, but we expect things to have broadly adjusted to the new rules of the game, and this is why we said, for example, that we will resume games launches early next year.
You at this stage cannot comment on these exact game launches. You know, what exactly are you up to in terms of genres or maybe whatever? Any color on that?
So we don't typically release kind of names of titles unless this has been made public. So I will not be able to elaborate beyond what we said through the press. But among the launches which the market is aware are coming is World War III, which will be released on PC and console next year. So the PC launch is expected already in Q1 2022, with console launch later in the year. More broadly, we said that we have 5 to 8 games which should be suitable for global release in the next 12 months. Obviously, it's a games business, and it is all subject to beta testing and retention. And hence, some titles actually never go for global launch. It's a normal course of games business. But already, let's say in Q1 next year, you should expect launches from us resuming with a maximum of 8 titles to be launched last year, assuming everything goes extremely on schedule, which doesn't normally happen in games.
Okay. Since we're talking about games, could you maybe talk about the marketing costs, which is something you discussed in the calls, that they apparently elevated because of the IDFA developments, and as far as I remember, your implicit assumption is that next year they're going to normalize, and this next year is they're going to become more rational, right? If you could just talk about that.
So it's not necessarily what we said around marketing costs, because actually the customer acquisition costs per se have actually gone down post IDFA, as there was less competition for certain marketing channels, because the efficiency of these marketing channels has gone down. So essentially, we can acquire users cheaper in most cases, but these are, let's say, less quality users than what we have acquired in the past, given that we could identify them much better than we can do today, at least when it comes to iOS devices. So this means that these users, for example, convert into paying users not as successfully as in the past. So depending on how this conversion into paying audience happens, ultimately this determines the effective efficiency of marketing campaigns. So we've seen some volatility in this efficiency. So in some instances, essentially ROIs were worse than what we have envisioned using kind of the traditional channels like Facebook, for example. So we have been diversifying our marketing channels quite a lot since the beginning of the year, using kind of smaller advertising networks, and this is why you're seeing kind of very strong numbers from platforms like Applovin, for example, with 300% plus advertising growth, which they have just released last week. So this is kind of the reflection of IDFA impacts, where some of the budgets are shifting to, let's say, historically less traditional channels. And yes, we see adjustments taking place across the market. So again, things will never return to where they were, because obviously user identification has changed and will not return to where it was in the past, but alternative identification methods are appearing, and kind of all players will be affected, and the bigger platforms like us are generally in better position versus the smaller players. So in some sense, this would provide some room for market consolidation, including on game side, for example. So we, again, are quite comfortable with our position, and we just decided to take this prudent approach in 2021 and not be launching aggressively new titles when marketing is the highest cost item in games, and when we cannot be 100% sure about kind of the efficiency of our marketing campaign. So now situation is much better than it was in April and June. And we would say that we're very comfortable saying that kind of next year our launch activity will be a lot more normalized when it comes to games.
Got it. Maybe we could rewind back a little bit and talk about Kontakte that we mentioned a bit earlier. Starting with the big picture, with kind of helicopter view, what's the biggest competitive advantage of the platform right now?
So Kontakte is the first example of a proper super app on the Russian market. So it has the scale, and it has hundreds of different use cases which go well beyond its functionality as just a social network. We would say that in that sense, we continue to follow the WeChat playbook, and we are quite pleased with the progress made and the fact that users are increasingly comfortable making taxi bookings through Kontakte or ordering food from restaurants through the social network, in addition to communicating with friends or doing work-related conference calls or studying or listening to music or posting stories or watching short videos, and hundreds of different other things which can be done through Kontakte, including through the mini apps platform, where nearly 40,000 different apps are now connected. So in that sense, this is our major competitive advantage versus other social platforms, in addition to the fact that we are extremely localized, and we offer kind of extremely high level of support to our consumers and our business partners on 24/7 basis, and everything is kind of clear, transparent, accessible, and reliable in that sense. So I would say that's probably item number 2. And the extreme dedication to the local market allows us to kind of be faster in terms of new rollouts. For example, our short video product last year we launched after extremely hard but 3 months of development, and this is also quite helpful, we feel, in terms of constantly updating, enhancing the social network, which is quite important these days, given how fast appetites of our users are changing.
Thank you. Did you have any targets in terms of time spent by users of Kontakte?
Well, every social network obviously aspires to maximize time spent. As the more engagement you have and the more users you have, obviously the more room you have for monetization. So in that sense, we aspire to remain the #1 platform in terms of total time spent, as well as making efforts in boosting our video efforts in particular, to ensure that time spent per user also continues to perform well, as we see that short video products in particular are getting significant traction across markets. And in China, the leading short video platforms account for nearly 100 minutes per day in time spent, and this is now approaching to be the case in the US and the UK, and we see that in Russia there is significant potential for growth in time spent overall, because social time spent is slightly more than 50 minutes per day now, and Kontakte accounts for about 32 minutes per day of time spent in social, so we account for a dominant piece of the time spent pie today, but obviously there is room for expansion of overall time spent in social, and this means that there is also significant room for growth in time spent on Kontakte, but there is no specific target we put in place, because obviously it is highly reliant on how successful we are in our product launches, such as clips, and what happens to competition, and what happens to kind of engagement online, which can move in different directions, as we have seen last year, given the pandemic, for example. But obviously, this is a metric we check internally very adamantly, and this is one of the KPIs for management of Kontakte, but there is no target which we have articulated externally when it comes to 10%.
Thanks, pretty clear. Just to remind everyone, so you can ask your own questions, because I'm running out of my own questions. And I know that there have been a lot of Zooms, a lot of video conferences and webinars in the past year, in the past 1.5 years. But it would be great to see a bit more activity on the part of the audience. Okay, let's maybe move on to O2O. Dan, if you could just talk about Samokat future expansion plans. It looks like it's been expanding pretty rapidly. So if you could just discuss, how their current plan looks like.
Yes, so Samokat business we are extremely excited about, given its growth rate. It is the fastest growing e-grocery platform on the Russian market today. And we are seeing very strong trend in terms of user numbers, with MAU more than doubling year to date, exceeding 1.2 million, and orders in 3Q growing 4.2 times to nearly 19 million, which means that in terms of orders, it's just 15% below Delivery Club level already. And revenue grew 4.5 times year on year as of 3Q to 9.5 billion. And we reached nearly 760 dark stores with increase of 2.6 times year on year on this parameter in 3Q. So this is not the limit. The company continues to add more cities to its regional portfolio. Now it's present in 22 different cities, or as of September, I should say, it was present in 22 cities. And actually, it had a moderate expansion in Q3, having added just 2 cities. Actually, plans for expansion will be more active when it comes to Q4. And we are targeting a beautiful figure of about 1,000 of dark stores we aim to reach before the end of the year. So I guess here we're competing head-to-head with Delivery Hero in being the largest dark store operator outside China. So in Q2, we were larger than them in dark store base. In Q3, we ended up a bit smaller than them, as they were a bit more active in adding dark stores in Q3, but it's quite possible that by the end of this year, we will be larger than them again. And what we see is that the Samokat model works extremely well in large cities as well as small cities. So kind of this model doesn't just stop in 1 million plus or 500,000 plus type of population locations. We see model actually viable in cities with even 100,000 in population. It all depends on being able to identify high density locations within particular cities. Of course, this means that you won't have a large number of dark stores, but nevertheless, you can open dark stores even in such cities, assuming that you can find this aspired high density areas within the town. And we see retention at extremely strong numbers of 80% of users repeating the order within a month after they join the platform, and retention continues to be very strong after 3, 4, 5, 6 months time. And we see kind of break-even times on dark store level at 6 to 8 months. Hence, there is already a very large number of dark stores which are operationally profitable across Samokat. And this is why the burn rate of the platform relative to GMV it generates was the lowest in Q3 versus any quarter since the launch of the O2O joint venture and consolidation of Samokat. and we anticipate this trend to continue, and believe in attractive economics of this business, which can result in EBITDA margins not worse than for traditional food retailers, and potentially higher than this level, actually. So we are super confident in Samokat case, and as we said in our recent press release with Sber, the majority of funds provided to the O2 JV recently in the amount of 12.2 billion rubles from us and Sber. So half came from us, half from Sber. He's actually channeled to e-grocery efforts, so Samokat and e-grocery business within Delivery Club. So that's kind of the target use of funds which we have provided to the O2 recently.
Thank you. I have a couple of more questions about Samokat before I go on. There are actually a couple of questions from the audience. I'll read them. So could you please share your view on the O2O JV future? I mean, strategically, given the current proposed divestiture by Sber.
So actually, the divestment of Sber stake in VK has nothing to do with the O2 JV. These are two completely unrelated topics. So there is no provision in kind of the JV structure and future that Sber has to be the shareholder of VK in any shape or form. So in that sense, strategy remains the same and commitment remains the same to O2O JV from us and Sber, as reflected by the recent capital injection into this joint venture, which happened about a month ago only. So in that sense, nothing changes versus what we have been saying, that we remain committed to the JV, and given the funding support from us and Sber, it highlights commitment from both sides to all sides of this business.
Maybe continuing with Samokat and the unit economics in Moscow and the Russian regions, how do they differ, if you can disclose it? And maybe another one is, when do you expect it to become profitable overall?
So economics is similar. I will not go into exact details because we haven't provided those to the broader market, so that's probably not the best way to start this disclosure. But it's important to note that Moscow obviously has kind of higher average checks. At the same time, Moscow has much higher rental levels as well, with this cost item being among the highest in the equation of the dark store operating model. So on the other hand, we're also seeing some regional cities where density of orders per dark store is actually higher than that in Moscow, because the model of Samokat creates actually bigger wow effect in the regions, because in regional cities, population is mesmerized by getting food within less than 10 minutes. And so kind of the retention of users and the frequency of purchases is even higher in many regional cities versus the capital cities, which we would call Moscow and St. Pete. So let's just leave it at saying that economics are not very dissimilar between Moscow and the regions. And in terms of break-even, again, we haven't provided break-even timeline specifically across all the O2O assets, but in the recent fundraising by O2O, we said that within 2-3 years from now, the majority of assets within O2O should be EBITDA positive, and obviously, you can imagine that some of the assets, such as Delivery Club, and particularly its ready-to-eat model, is closest to break-even. But Samokat is not very far behind, and the timeline of break-even is basically subject to our growth ambitions. If we were to stop opening dark stores, then, as I said, this business would be profitable in a very short period of time on the existing dark store base. But it's not a question of, let's say, horizon more than 3 years from today.
Mm-hmm. You just said that regional consumers are mesmerized, right? You used the verb mesmerized. I remember in early stages of my career when I came to equities and I was doing food retail, there was a big Euromonitor report which was saying that shoppers are mesmerized by hypermarkets, Russian regional shoppers. What a difference 15 years can make.
Yeah, well, hopefully the outcome of what I said will be a bit different than for hypermarkets, but let's just say that for sure there is a large layer of population which, despite the state of the Russian consumer, which cannot be called as booming, is willing to pay for time. So I think it's especially in the era of ESG, and I'm not saying it just because it's a popular word, but generally, I think services which allow people to save time and spend time on their loved ones or other activities that kind of provide higher value to their life is extremely positive, and we are very happy to be participating in the service, which essentially, as of today, kind of saves like 400 years of life time, which can be spent on things we like to do versus putting clothes on and going to a nearby neighborhood store.
Mm-hmm. Could you maybe comment on City Mobile versus Yandex Taxi, and your immediate competitor, the key one in Q3? So there seemed to have been a little bit of a gap in terms of growth rates. And what do you think about that? What was the reason behind that?
Yeah, so obviously ride-hailing, we would say that related results are arguably worse than what we have been anticipating at the time of the creation of the O2O JV, but obviously this kind of new era industries generally have less kind of predictability and visibility, as these are new industries by default, and but also there were kind of a few black swan events which unfortunately had a negative impact on the ride-hailing industry in particular, such as the pandemic, which we obviously could not project back in 2019. And then the pandemic resulted in the supply shortage, which continues to be the case on the Russian market, although not as acute as it was a few quarters back. But nevertheless, there is for sure not enough supply to cover the recovery in demand we're experiencing, which requires higher subsidies from our side. And obviously, we saw kind of a well-funded competitor enter the market and launch like 30 new cities earlier this year, and having crossover with us in like 8 different regional cities, also boosting kind of the consumer and driver subsidy levels on this market. So given that we are not number one player in ride-hailing, unlike, for example, our position in the restaurant delivery market, certainly kind of having this a tight supply situation, along with lower ETAs, given the obviously lower densities we can offer versus kind of the leading platform on the market, competing with the new entrant would require more resources from us, let's say, versus the market leader per any incremental share in incremental market share, because we would have to kind of subsidize more on the consumer as well as driver side. So we decided to focus more on unit economics and on the highest density cities such as Moscow and St. Petersburg. So as a result, there has been some deterioration in growth when it comes to city mobile performance. At the same time, the platform was showing positive contribution across the platform as of September, and we think that it's best to focus on its continuous development when it comes to its tech stack. So it continues to improve its mapping product and its matching product, and we think that this type of development and investment will be providing for a much more sustainable path for city mobile versus providing free rides to consumers, given limited loyalty on the ride-hailing business side. So that's what we're focused on right now.
How is Delivery Club doing? And when do you expect it to become profitable?
So Delivery Club is doing extremely well. It continues to show very healthy growth rates in Q3. Obviously, the pace of growth is coming down a bit as Delivery Club had higher penetration heading into COVID. And this year, yes, is a bit of a normalization year, although I'm not sure how much normalization we're really seeing as human beings. But nevertheless, it remains by far the #1 player on the market. And the gap versus the #2 player is kind of nearly 2 times based on our data. And we see extremely strong traction on not just restaurant side, but the grocery side as well, which is approaching kind of 20% of revenues of Delivery Club. And we see kind of NPS scores going up, and retention numbers actually supported by the addition of non-restaurant deliveries. So a kind of broader mix resonates well with our end customers. And we continue to see improvement in unit economics. So obviously, as I said, ready-to-eat business is closest to profitability. And we could be profitable today if we were willing to sacrifice kind of certain share of market share to reach this profitability. And nevertheless, this should be the first O2O asset to reach break-even. Again, I'm not willing to kind of selectively disclose exactly when it happens, but given that we said that a key O2O asset will be profitable within 2-3 years from today, I guess people can make certain conclusions from this statement.
Right. Okay, I think we have 3, 4, 5 more minutes. Could you talk about rebranding? Any positive effects so far, or maybe any negative effects so far, or maybe no effects so far?
So it's obviously very early to talk about the effects of the rebranding because it happened on the 12th of October only. But we certainly anticipate kind of positive results from association of all our products with VK. So either full rebranding or endorsement with VK, because one of our case studies heading into the rebranding showed that kind of less than 10% of our users associate Mail.ru Group with the social network. So this is exactly what we're looking to change. And we have obviously done lots of work before making the decision on the exact brand, which will be our new brand. So there were different scenarios, of course, which we were playing with. And as part of this analysis, we have done, for example, rebranding of Worky into VK Jobs. So this is a classifieds arm of EULA. And following the rebranding, product awareness rose by nearly 40%, and intention to increase the service increased by almost 50%. So obviously, Worky has not been a very big brand, and the impact on the smaller brands will most definitely be higher than on the most established brands. But nevertheless, association with a brand known by 100% of Russian internet users, and the brand which almost 90% of kind of Zoom, I mean Zoomers in terms of age group versus those using Zoom, but of the young, let's say, audience, which they see as their most popular brand. We think that it will certainly have kind of a broad number of benefits which we can draw for the group in terms of reducing customer acquisition costs and boosting retention and kind of increasing appetite for our loyalty program and so on. So we envision this event to be positive for our top line trajectory as well as our profitability. But definitely this doesn't happen overnight. So essentially kind of the rebranding of different units, related kind of decisions will be made next year in some cases, right? So we haven't kind of rebranded everything on day one. So this will be a continuous process, but already I would say in the near term, we should see certain effects on kind of user engagement with this new and stronger association between the various units of the group.
Maybe the final one for today. Could you talk about your corporate top 3, top 5 priorities for the remainder of the year and maybe early 2022? What are you most focused, what are you working on with the most focus and most rigor?
Well, certainly, if we talk about the rest of this year, we are fully focused on meeting our adjusted guidance, and meeting this guidance means that we need to demonstrate further progress around profitability of our key segments such as games and communication and social. So these are kind of the more broader focus when it comes to corporate areas. And number 2, I would say it's related to continuous enforcement of perception of the strength of our positioning on the social networking market, as we see that there are some concerns around competition, and this is why we are planning to host an update on Kontakte in the next few weeks to provide an update on our core business. And here I think of course, one of the key focus areas is continuous progress on a project like VK Clips and short video. And I guess looking into next year, we believe that it is important for the market to see delivery on profitability of assets which remain in investment phase currently and have been for a number of years. So in that sense, one of our big focus areas will be on delivering the first year of profitability for EULA and continuing to improve profitability in our online education business, as well as unit economics improvement across GV assets. Because this track record, we feel, will be quite important for perception of the entire group and perception in particular around assets which require near-term investments from our side.
Thank you. I think this concludes our today's conference call. Tatiana, Anna, thank you so much for joining us. Thank you so much for the discussion. Dear clients, thank you so much, and see you during the next calls.
Thank you, everyone. Have a great day. If anything, you can always reach out to myself or Anna via contacts on our IR section of the website. Thank you. Bye.